This rebasing has reset the size of Nigerian economy, with nominal GDP now standing at 238.4 trillion naira in fourth quarter of 2025, a more accurate picture of Nigeria's current economic position. The current rebasing covers the period from 2019 to 2023, using 2019 as a new base year. According to NBS boss, while briefing the press, he says the new figure represents a 41.7% increase compared to the previous rebasing exercise conducted in 2014.
To the results. Following the rebasing exercise and the revision done to previously released estimates, I can now report that in 2019, which is the new base year, replacing the old base year of 2010. In nominal terms, Nigeria's economy was estimated at 205.09 trillion naira. That was as at 2019. This represents 41.7% increase over the previous nominal GDP of 2019 using the old base year. You can see that a substantive improvement has been done between the old GDP and the new rebased GDP.
Meanwhile, Nigeria's gross domestic product also expanded by 3.13% in real terms year-on-year in the first quarter of 2025. The NBS says the growth marks a modest rebound from 2.98% recorded in the fourth quarter of 2024, although slightly lower when compared to the 3.61% posted in the corresponding quarter of 2024.
The GDP grew by 3.13% year-on-year in real terms in the first quarter of 2025. This growth rate is higher than the 2.27% recorded in the first quarter of 2024, following the benchmarking of the estimate. The performance of the GDP in Q1 of 2025 was driven mainly by the service sector, which recorded a growth rate of 4.33% and contributed 57.5% to the aggregate GDP.
But beyond the numbers lies the question: how does Nigeria turn this statistical growth into real investment and job creation? Frank Omalape, Arise News.
Well, thank you, Frank, for an in-depth analysis on the latest GDP figures released by the Nigeria Bureau of Statistics. We're now being joined by Adetilewa Adebajo. He's the Chief Executive Officer of CFG Advisory. Thank you so much, Mr. Adebajo, for joining us on the news tonight.
Thank you. Good evening.
Great. I think a good place to start would be to break it down for average Nigerians who are watching tonight. The NBS says it has rebased the economy. It grew over by 40%. For the average Nigerian watching tonight, what does this mean? And does it change their lived reality?
Thank you very much. Well, I think it's quite interesting as to what those statistics are. And I think the pronouncements actually were a bit confusing because what the statistician general told us then was that he was looking at 2019 figures, and based upon Nigerian GDP figures for 2019 figures, they're looking at a GDP of 205 trillion, which is just about $138 billion. But haven't looked at the numbers, and I think what he said is that currently our GDP for 2024 is 314 trillion naira. If you take a look at that in terms of dollars, you're looking at about 243 billion US dollars. But having said that, I think there's really not much significance in terms of the estimates that we have seen. Because even with all the rebased numbers, it is quite clear that Nigeria's position as the fifth largest economy in Africa hasn't really shifted that much. Nigeria has lost its dominance as the largest economy in Africa. And what is also quite important for us is the fact that growth numbers are still not optimal. Last year, GDP growth in the fourth quarter was 3.8%. It's down to 3.1% in this first quarter. And if you take a look at my charts, as you've seen, which came from the World Bank, you'd see Nigeria's GDP numbers in blue at the bottom. So if you take a look at Nigeria's GDP, we were close to like 550, close to 600 billion GDP at a point in time. And we've dropped significantly. And in terms of our GDP, is down to about 200 and 240 billion now. So I think it's safe to estimate that our GDP at 200 billion, we've lost close to nearly 400 billion of our GDP in the last 12 years. That is pretty significant. And if you take a look at the line in red, that line in red is what you call the $1 trillion economy. You can see Indonesia, in its case, has crossed that line. But if Nigeria wanted to achieve a $1 trillion economy by 2030, then our economy needs to be growing 5 times faster than what we're currently growing at now. So, and for a population of 200 million people, our GDP capita has dropped to about close to $804, from a high of about $3,200 about 10 years ago. And you now find ourselves in a situation whereby 5 times growth we need at our current rate is clearly this GDP growth is not optimal for 200 million Nigerians. That's the reality we face.
Great. Thank you for breaking that down, Mr. Adebajo. In other words, this rebasing didn't do any good at all. So one wonders why it was done in the first instance. But let me ask you, if the government wants to hit that $1 trillion economy, as you have highlighted, what do we need to be doing to hit that 5 times faster rate? We look at the sectors that was listed by the Statistician General. The 5 performing sectors are crop production, trade, real estate, telecommunication, oil and gas. Any surprises there?
Okay, thank you very much. As you've said, it's not about rebasing. And rebasing, these numbers are not surprising. Rebasing is a statistical exercise which you go through, and it's not done to boost GDP because the reality is what we face. And let us take a look at the status of the Nigerian economy half year 2025. We have actually achieved a significant amount of economic stability. I think there's a consensus on that. There's also a consensus on the fact that the trajectory on inflation is going downwards. The number the NBS puts out is in doubt, but I think with the MPC meetings that are coming up this couple of days, if the MPC has enough faith or confidence in those numbers to be able to cut rates, then I think the proof is in the pudding of that will validate those numbers from the MBS. But having said that, reforms and economic stability are very important, but they're not enough by themselves to be able to grow your economy. Nigeria's economy needs a growth rate of at least 8 to 10% on a sustainable basis to lift most Nigerians out of poverty and to restore purchasing power. One of the challenges of the Nigerian economy today is that we've lost purchasing power. The monetary policy over the last 2 years has been focused on reducing inflation to enable us to restore parity and purchasing power. So that is why you've seen significant amounts of high interest rates and you're beginning to see tightening and to be able to see what the issues are. But one of the challenges with inflation is the fact that the FAC allocations to the subnationals, the government, has gone up from about 7 trillion to almost 14 trillion in less than a year. And right now, last month, there was a significant outflow of about 1.8 trillion just for FAC money that's coming out of the system. So this is the challenge. Because of this money coming out, it is causing problems of slowing down inflation. So what is important now is that government needs to build on the economic stability we've seen. And you need to put together policies that will stimulate growth, which is your structural reforms, and more importantly, where is the industrial policy, where is the trade policy in the light of the Trump tariffs, and more or less what is the investment policy doing. And these three policies don't work by themselves. They need to be synchronized with both monetary policy and fiscal policy.
What I find interesting is to look at these sectors. When I see real estate coming in third, oil and gas coming in fifth, telecoms coming in fourth, crop production as first, it does sound interesting. Perhaps diversification is here to stay. But let me ask you, the GDP is bigger, yes, but so is our debt. Revenue to debt servicing is now at about 68% at the last check, almost hitting the 70% mark. Does this rebasing improve our fiscal outlook in any way? And does it give room for the government to borrow more? What do you think?
Thank you very much. I think there's no correlation between the rebasing of GDP and the fiscal issues. I think the reduction in the debt to revenue numbers you've put has to do with fiscal management. Our debt profile is approaching close to 150 trillion naira, which is about a 60-40 split between domestic and foreign, which I think clearly we're heading towards our headroom. But I think debt sustainability is not a problem. And I think the issues with our credit ratings being upgraded are there. It's not so much about the debt. The question for me is that the problem is that the debt service, I think, is taking a significant portion, which is the number one line item in the budget. So I think what is important is that government needs to restructure its balance sheet. The federal government needs to restructure its balance sheet and optimize more equity within its capital structure. And what we have suggested is that government needs to sell down significant amount of JV assets, raise about $50 billion to be able to restructure its debt profile. I think once you do that, then the debt becomes more sustainable. But right now, we are not yet in a situation of having a significant amount of debt issues or debt problems. The problem is the fact that the savings from the subsidies, which is now being transferred to the FAC account, as of January this year, 50% of those savings are now being transferred from the NNPC to the Treasury, and there's more money coming into the system. But unfortunately, a significant amount of that money, both at the federal level and the state level, is going towards debt service instead of capital expenditure. And that is where we need to restructure. So what is important, like I said, is how do you grow the economy? The oil and gas industry, as you've said, for instance, we've seen new management in NNPC. About 5 years ago, 6 years ago, we had close to $25 billion worth of investments a year coming into the oil and gas industry. That number dropped to under $2 billion or even $1 billion last year. So with the restructuring of that industry, with the transactions that have taken place now and opening up of that sector, I think we can begin to see a resumption of stimulus within the oil and gas industry. But more importantly, I think it's important to begin to look at how do you invest in the gas assets. We have a massive project coming up, which is the LNG Train 7. And I think it's important that we exploit our gas assets and develop them to be able to support not only LNG Train 7, but to get LNG to commit to Train 8. LNG Train 7 is a $7 to $8 billion project. And we need more of those projects to be able to stimulate growth in the economy. Another sector is that we're importing $25 billion worth of goods and services from China every year. So the government also needs to get into bilateral discussions with China to be able to get Chinese companies to partner with Nigerian companies to begin to manufacture a significant amount of this $25 billion worth of goods and services in Nigeria to the benefit of our economies. I said also earlier that we have about 4 refineries, sugar refineries sitting in the ports, but most of the sugar we use for these refineries are imported. We need to develop our agricultural value chain so that these refineries can be supported locally. That is how you achieve 8 to 10% growth, deliberate investment policies that will stimulate growth of 8 to 10%, again, with your structural reforms.
In other words, it's not time to get those ashwabi and call the party yet. We should manage our expectations, Mr. Adebajo.
Well, it's not yet Uhuru. Definitely not yet Uhuru. Inflation is still high. Rates have not yet been cut. We've established stability, but reforms and stability is not enough to grow the economy 8 to 10%. We need the structural reforms that will grow the economy at 8 to 10% of GDP. So the 3.18% GDP we're seeing now and the rebased GDP we're seeing now, although encouraging, is not enough to get us to the promised land.
Fantastic place to leave it. Thank you so much, Adetilewa Adebajo, Chief Executive Officer of CFG Advisory, for being on the news. We do appreciate your insights.